Going on, everybody? This is Bull Run Crypto, and today we're going to talk about how low could Bitcoin go, because this is a subject that keeps coming up as the market continues to run sideways. People are concerned whether or not the altcoin season is ever going to kick off and get started. So we're going to actually give it another side to the story. We're going to look at the downside. It doesn't mean that this is what we think is going to happen. We're just looking at the other side of the coin to see what could possibly go wrong or how low could Bitcoin go, which as Bitcoin goes, so too does the rest of the market. We just did a rebrand. What do you guys think? So anyways, let's take a look here at the Bitcoin price. Okay, right now it's 95,000. Actually, it just dipped below 96. It was holding above 96. So it's stuff like that that makes people really concerned over time. But what we're going to do is we're going to look at the price action here on the chart to see where the support levels are. You can see right here in this range is a strong support level. So this area right here is around 57 at the low point. Okay, and it averaged around 70,000 for a long time up until the inauguration, or well, I should say the election, and then the anticipation up to the inauguration really kicked it off. So I would say if you just took a look at this sideways movement in the short term, 57,000 could be in play, but a lot of people would say that around 70,000 is a strong support level. So if we were to ever start breaking down below 90, you could anticipate going way below 80 and into the 70s, and then seeing if we can hold that. If not, then we would be going back down into the 50s. Okay, that's something to take into consideration. I'm not saying it's going to happen, but based on the charts, that's what we have. But let's go to ChatGPT and ask some of the questions that we may have to see what they have to say, or ChatGPT. We're going to use AI for this. So what are some factors that could affect the Bitcoin price? Market volatility. Bitcoin is known for high volatility, price swings of 10%. That means it can go 10% up in a day, or it can go down 10% in a day as well, right? So people are kind of standing by anticipating this possible God candle, the Omni candle. The Omni candle, which is supposed to be like, I don't know, if Qatar or the United States government or Dubai or UAE or Saudi Arabia were to buy a bunch of Bitcoin all at once, you'd have this big spike, which would probably be much larger than a 10% gain in price. But the opposite of that could be a massive sell-off. What exactly triggers that? Well, what happens is when the market starts to sell, when Bitcoin starts to sell off, there's people who have long positions and they're going long with the market. They think that because Trump's in office or because some other external factor with the fundamentals is impacting it, that it should just be bullish, right? But then they take out long positions. Lots of these people do this. Lots of institutions do this. But then all of a sudden the price starts going down, and then all of a sudden, bam, it starts hitting those longs, and then all of a sudden the price goes off even further. And that's what we saw recently happen, right? When Bitcoin went down below $92,000, $91,000 per coin, it was because a lot of longs were getting liquidated. So that volatility, it's not just because of the short-term selling, but it's when the longs start getting liquidated, and then the cascade effect happens, and then that eventually triggers in panic selling, where people who are whales, they have stop losses in place, or they just in their own mind are like, okay, I got to get out because it's starting to look very bearish. So here you could see historic support levels, which we just talked about. The resistance, going up, but then you have support levels coming down. And you could see right here, we just highlighted some of the previous lows in the short term, which we saw in November, October, which we would say could be in play, which is that $57,000 range, which is where I would say is a key level of support if we were to start getting some price volatility that was bearish. Then you have the fundamental value. While some argue that Bitcoin has a floor based on its mining cost, network adoption, and its appeal as a store of value, others caution that extreme market events like severe economic crisis or major regulatory crackdowns. We saw this with tariffs. Tariffs had a ripple effect on the market. People did a knee jerk. Sometimes whales use these little fundamental things as excuses to take profits. A lot of people don't really bring that up enough, but sometimes they will use an event by a president or China or whoever and just take profits, and then they sell it off, kind of like a good opportunity for Binance to, take a bunch of chips off the table and bring down the price. And then, that forces a bunch of weak hands to sell. And then they end up coming back into the position with more buying power than they had before. So they end up, basically netting a bunch of profit just by doing that, by manipulating the market. So, but the fundamental value intrinsically or as a part of it would basically be that, external effects, economic downturns. The funny thing is, Bitcoin was actually built for economic crisis. That's why it was in place. It was like, okay, hey, the fiat currencies are collapsing, the dollar's going down, there's an economic downturn. We need to get our money into a safe haven, so they go into gold and silver, or in this case, now Bitcoin, the digital gold. But we haven't seen that. It seems like anytime there's any sort of negative news, we even saw this during the pandemic type era when the price would go down around, I think, March 2020. Yeah, about March 2020, we had the price dip down to around $3,500 or $4,000 per Bitcoin in March, and then it just shot back up. So in this case, you would have thought that Bitcoin would have been the store of value where everyone was taking their money out of fiat and going into Bitcoin. No, Bitcoin was actually heavily impacted by it along with other stocks. So then you have speculative options, or speculative opinions vary. So estimates range widely from analysts suggesting that Bitcoin might find support around levels seen during the past bear markets to others warning it could plunge far below those if market conditions deteriorate significantly. This is like the whole idea that, Bitcoin's going to zero. They've always said this ever since we've been in crypto, right? Like, this is not something that's new. But if we take the chart here and we just zoom way the heck out and we look all the way towards, let's just say, 2018. I mean, in a in a real crummy situation, you could see 3,500, around 3,600 is like a real low point for Bitcoin. But you can see right here, here's a reasonable low around 17,000. That one happened in 2022. So that's not too far off. But I would say this little range right here is a real strong support level, and we would be looking at the low there. And again, that's that 57,000. If we go down to this level here, we're looking at around 15,883, so around like 16,000. And if we just broke down entirely, we're looking at $3,500 being in play. But I would say that's like off the table. I mean, that would mean that MicroStrategy would have to sell, BlackRock would have to sell, all of these big holders of Bitcoin, the U.S. government, China. I mean, there would have to be a mass sell-off. So I don't really see this being in play, and I don't really see this being in play. The only one that I think could possibly be in play is right here at the $57,000 range, and that would be an extreme bear case. But it could happen down here. I'm just giving you guys hypotheticals of things to consider based on technical analysis and what we're looking at here. And then there's uncertainty and risk. There's no consensus on a definitive price floor, and even widely held views can change rapidly in the crypto space. So, opinions vary. I mean, market conditions change. I mean, everyone always likes to think that everything goes in cycles based on technical analysis. And really, I would say, and I've always said this, I think technical analysis is around 25% of it. I always laugh and chuckle and giggle when people try to take a brand new altcoin and do TA on it. So they'll be like, all right, let's do TA on Solana. Well, Solana, okay, maybe nowadays, but let's just say Sui, it's like, or Polkadot. It's like, there's not enough price action, there's not enough liquidity, there's not enough movement in that right there to really justify doing TA. And even Bitcoin in its earlier days, it was kind of silly to do TA on Bitcoin. Nowadays, you could probably do TA on Bitcoin a bit more, but when you're looking at someone doing TA on these small coins or these brand new coins that are less than a year old, I kind of laugh about it, really. But right here, you can see this information is for educational purposes only and should not be considered financial advice. ChatGPT wants to make that known. It's getting to a point where I wish we didn't have to always tell people this, because it's kind of annoying. Everyone hates hearing it, but yeah, it's not financial advice. It's for educational purposes. I think it's common sense at this point. If you've been in crypto for a while, you know that every single YouTuber is not giving financial advice. They're giving their opinions or education, but ChatGPT is also doing the same thing. Regulatory concerns and legal actions, government regulations. So we've already seen that with the SEC going after Ripple. We saw it with, you know, the Howey test. We've seen it with so many different things related to crypto crackdowns. The EU is still not really entirely sold on Bitcoin, so they're still a threat. China is the same way. India is the same way. Trump seems to be bullish on Bitcoin, so that's going to be something to take a look at. Enforcement actions, crackdowns on exchanges. We saw, what happened with CZ and Binance. They're basically not allowed to, do business in the United States with their main exchange. So we have Binance US. You also had Bankman-Fried with FTX, and then you had Celsius do some funky stuff, and then you have tax policies. I mean, tax policies can impact the price one way or another, right? If they say, oh, no more capital gains, people are going to say, well, why invest in stocks when I could just invest in crypto and get the same kind of fun out of it, same kind of return, possible returns, or at least put a little bit more into crypto than I've been putting in because the capital gains are removed. So you can see how that kind of stuff could impact it. Or if they came out and they said, oh, we're going to tax crypto even more, and it's going to be like, an unfair tax, right? I mean, if the Democrats get back in there, they could possibly do something really wonky. That's what they're known to do. They love taxes. Democrats are known for taxing. They're known for overspending, and they don't exactly have the best fiscal policy, do they? That's what we've seen. Market sentiment and investor behavior. Fear and uncertainty. Negative news can impact. We talked about the panic selling, speculative bubbles. There's always this idea of what the 5 stages of a bubble are. You could type in that right here. What are the five stages of an economic bubble? So we'll go back up here, but that just shows you some of the things that you should take into consideration. We'll revisit that in a moment. But profit taking, big institutions always like to find reasons to take profits. They like to take chips off the table. At the end of the day, they're in the business of making money or printing money or earning money, whatever you want to put it. Macroeconomic factors, global economic downturns. We talked about that. Interest rates change. That's something that Jerome Powell's been. We keep hearing that guy's name. He's we've got him on the radar, right? And then we have technological and security issues, network vulnerabilities. I mean, what if it was revealed that there was a big bug or there was a major problem with Bitcoin for the long term and it was just not going to be used for cybersecurity reasons? Technical failures, we've talked about that. Energy concerns, those kind of have gone away, but they could pop back up again. It just depends on how that's viewed. And then liquidity and market dynamics, low liquidity at times of lower trading volume. Like, what if it just doesn't really hold up? Market manipulation, pump and dump. We've seen this with the meme coins. I mean, meme coins haven't really had that much positive impact on anyone except for like a handful of people who basically won the lottery with a few different meme coins. But it's brought in a lot of retail speculators who eventually end up leaving saying, F this, I don't like crypto, I don't like Bitcoin. So I don't know if that's necessarily a good thing. So it brings them in, gets them exposure, and then if they're wise enough, they say, well, okay, maybe I shouldn't be gambling in the meme coin market. Maybe I should be focusing on Bitcoin or something like that. And then you have competitive market developments, alternatives. Some say XRP is an alternative. Some say Solana. Some say Ethereum's even an alternative. It just depends on what people think are an alternative, whether it's Hedera, Hashgraph, or maybe it's something completely different than this. Maybe China, Russia, BRICS come up with something that's, I don't know, maybe going to become more lucrative or possibly profitable. These are all just ideas. Again, it's educational input. It's things to consider. But we'll see what ends up happening. And then you see who are the largest Bitcoin holders. Well, with ChatGPT here, I don't think they have the most up-to-date idea or information, but they do have enough information to give you a good idea. Satoshi Nakamoto has mined around 1 million BTC, whoever they are or whoever he is. Institutional investors, publicly traded companies like MicroStrategy, Tesla, BlackRock, Grayscale, Block. I mean, you've got a bunch of companies on there that, obviously hold a lot of Bitcoin. And then you have custodial holdings, major exchanges like Binance, Coinbase, Kraken. They have a lot, right? Bitcoin whales, private individuals, and funds. Large private holders, you and me, right? Or maybe your uncle, your grandpa, someone like that. And then you have government seizures, seized Bitcoins. You know, the United States holds, I think, around 200 or 300,000 Bitcoin that they've seized from things like Silk Road and whatnot. China has a bunch too. I think the United States just barely has more than China. The U.S. government is believed to hold hundreds of thousands of BTC as a result of seizures over the years. Unfortunately, ChatGPT doesn't give the best insight on that right there, but then you have the bubble that we talked about. So let's talk about the 5 stages of the bubble, right? And let's see if any of these line up with where we're at now. You have displacement. That's an external event, innovation, or change in market. That would be, you know, the halving event would be like a displacement that kind of kicks things off, right? Captures the attention of investors. That's what the halving always does. It's like, oh, the halving's coming, so the price should go up because it's going to cost more to produce a Bitcoin, and there's going to be less Bitcoins produced by half. And then you have the boom, which is kind of what we've already been seeing. We've had the boom, but I think right now we haven't really seen the euphoria. I haven't seen the euphoria that has me thinking that that the bubble's popped. So really, if we're still bullish, we're in a good, healthy market condition right now because we've postponed the euphoria for quite a long time already. I mean, I don't think we've had, I mean, you couldn't call November or December much euphoria compared to what we've seen in years past, could you? But let's just say we've seen that, and then we've already seen profit taking. So it's like, this one right here is a big question mark, the euphoria phase. Profit taking. I mean, some people would say when your favorite celebrity or someone you know has created meme coins, that's when you know you need to start taking profits. Well, we saw Trump. He created a meme coin. And then you have panic. So if we've already gone through euphoria and profit taking and now we're headed towards panic, well, that's when a bunch of people, the cascading events start happening where the big dumps happen. And, you know, I guess we're kind of at the mercy of Trump at this point, depending on what he does. I mean, he could do something that could totally pump the market, or he could do something that dumps the market. The thing that you have to take into consideration, him and his family are what appear to be quite heavily invested in Bitcoin at this point. So that's something to take into consideration, but that would be the panic final 5th part of the bubble. But it's possible that we're still here and we're just running sideways for a while. But we'll see what ends up happening. Let us know in the comments what you guys think, and we'll see you on the next one. I'm actually going to do how high could Bitcoin go next. So we're, again, looking at 2 different sides of the coin.